Ever feel like the old investing playbook is, well outdated?
Yeah, definitely feeling that.
Like the ground shifting under our feet?
Absolutely.
Well, buckle up, because in this deep dive, we're jumping headfirst into Lawrence G. McDonald's How to Listen When Markets Speak.
Oh, great pick. Love that book.
You know, you've been sharing some fascinating excerpts, and it's got me thinking.
Right.
We gotta unpack this because it feels like we're on the verge of something big.
McDonald definitely doesn't hold back.
No, he doesn't.
He's basically saying that era of predictable markets, the one fueled by globalization, cheap goods, it's over,
Kaput.
finished. We're entering this new era.
Okay.
And he calls it the fourth turning.
Fourth turning.
Yeah.
That sounds ominous. What are we talking about here?
So think of it like this historical pattern repeats every 80 years or so, where societies go through these massive upheavals,
Right.
old systems break down, new ones emerge. It's like a total reset.
So not just your average market dip. This
Yeah.
is like a full-blown systemic shift.
Exactly. And McDonald argues that's where we are right now.
Wow. Okay, so this fourth turning, that's the lens he's using to view all these unusual market forces we've been seeing.
Exactly. He uses it to explain everything from the rise of populism to the crazy volatility in the markets.
Yeah.
And he points to some really specific factors driving this change.
Like what? Give me an example.
Well, one of the biggest ones is the rise of China.
Okay, Jeff.
Particularly after they joined the World Trade Organization back in 2001. Everybody thought that was a slam dunk for the global economy, right?
Right, supposed to be this win-win.
Right. But McDonald argues that it actually had some serious consequences.
Like what?
Well, for starters, it fueled this massive shift in manufacturing from the US to Asia.
Okay.
Remember when Dell computers were made in America?
Vaguely. It's like a distant memory, right?
Exactly. McDonald uses Dell as this prime example. Companies were flocking to China to take advantage of those lower labor costs, which meant job losses here in the US.
Right.
And it also kept inflation artificially low for decades.
So cheaper goods, but at a cost.
Exactly. And one of the biggest costs we're seeing now is this energy crisis.
Energy. That's been a wild ride.
Tell me about it. McDonald calls energy the lifeblood of the global economy.
Right. Can't argue with that.
And he says we're facing this perfect storm right now of surging demand and not enough supply.
Yeah, that's not a good combination. Why can't we just, produce more energy?
Well, McDonald argues there's been massive underinvestment in fossil fuels.
Oh, okay.
Partly, he says, because of this big push for ESG investing, environmental social governance factors.
Really, everyone's talking about ESG.
Yeah. And while those goals are important, McDonald argues this rapid transition to green energy, it's not realistic given the immediate global demand, especially with developing countries coming online needing more and more energy.
So it's like trying to run before we can walk. We need to balance these ambitious goals with the reality on the ground.
Precisely.
He makes it sound like we're making some pretty risky bets on how quickly we can change things.
He does. And this theme of risky bets, it leads directly to McDonald's concerns about the rise of passive investing and ETFs, like index funds.
Yeah, those are hugely popular these days. What's the issue there?
Well, McDonald argues that while they've made investing more accessible, they've also created this dangerous serpent in the market.
A serpent. Okay, now you're just being cryptic.
He basically thinks this flood of money into passive investments has distorted prices.
Okay.
And created this illusion of liquidity.
Liquidity, right, meaning you can buy or sell easily without moving the price too much.
Exactly. And when everyone wants to sell at the same time.
Well, things can get messy.
That's putting it mildly.
Yeah.
And what makes this serpent even more dangerous, according to McDonald, is the role of options gamma.
Okay, we gotta break that down. Options gamma sounds a little technical.
It's really not that complicated. Just imagine a bunch of investors making the same bet that the market's going up.
Okay.
This creates this situation where even a small change in the market, it triggers this huge chain reaction of buying or selling.
So instead of a gradual shift, we get these wild swings up and down.
Exactly. And this volatility, it's amplified by things like options gamma.
Okay.
And McDonald believes that's something investors need to be ready for.
Especially in a world that feels increasingly driven by speculation and hype.
Speaking of hype,
Yeah.
McDonald does not mince words when it comes to the crypto craze.
This ought to be good. He was pretty vocal during that whole boom and bust, wasn't he?
Oh yeah, he was ringing the alarm bells early on.
So what's his take? Is he saying crypto is all just smoke and mirrors?
He sees some parallels with past bubbles, like the dot-com boom and even the housing crisis.
Oh, those were wild times.
McDonald argues that they were all fueled by speculation, this idea that You got to get in early before you miss out.
FOMO, fear of missing out.
Exactly. And we saw what happened when those bubbles burst.
Not pretty.
Not at all. And what's interesting is that McDonald actually interviewed Mark Cohodes for the book.
Oh, wow. Cohodes, the legendary short seller.
The one and only.
What do you have to say?
Cohodes was very skeptical of the whole crypto craze.
Yeah, he's not exactly known for mincing words.
No, he is not.
Yeah.
He basically said a lot of it was driven by pure hype,
So more about the story than the actual tech.
in a nutshell.
Hmm.
And McDonald makes this point that while crypto has potential
Okay.
to disrupt traditional finance, it's still vulnerable to the same forces that drive volatility in other markets.
Meaning
Meaning things like the Federal Reserve's actions, interest rates, quantitative easing, all that.
Fed. They always seem to be at the center of things.
Right. McDonald argues that the Fed's response to past crises, all those bailouts and stimulus packages,
Yeah.
they've created this kind of dependency in the markets,
A dependency.
like an addiction. Almost like investors have come to expect the Fed to swoop in and save the day whenever things get rough.
And that worked for a while, right? When inflation was low?
Exactly. But McDonald's point is that this time it's different.
Because inflation is a much bigger problem now.
Exactly. The Fed can't just keep printing money like they used to without making inflation even worse.
So it's a tightrope walk for them. They need to support the markets, but also keep inflation under control.
It's a tough balancing act. And this is where McDonald argues that investors need a new playbook.
Okay. I'm all ears. What does that look like?
Well, for starters, he suggests diversifying away from traditional stocks and bonds.
So looking beyond the usual suspect.
Exactly. He's a big believer in hard assets like commodities, energy, precious metals,
Okay.
even real estate in emerging markets.
So things that tend to hold their value when inflation is high.
Precisely. They provide a hedge against inflation.
Makes sense. Don't put all your eggs in one basket.
Exactly. Diversification is key.
Yeah.
McDonald also emphasizes the importance of understanding market cycles.
Cycles.
Yeah, knowing when to zig, when to zag. He actually shares some really insightful advice from David Tepper,
Tepper, the hedge fund titan.
the one and only.
Okay. I'm listening.
So Tepper's big thing is looking for signs of capitulation in the markets.
Capitulation seems dramatic.
It's that moment when investors basically just give up.
Okay.
They sell their holdings at any price, usually at the bottom of a downturn.
So it's like the ultimate contrarian play.
Exactly. Tepper believes those moments of extreme fear, they create incredible buying opportunities for those who are brave enough to jump in.
Easier said than done, though, right?
Yeah,
Keeping a cool head when everyone else is panicking.
for sure. But it's a powerful concept. And here's the thing, even with all this talk of uncertainty and potential bubbles,
Yeah.
McDonald isn't advocating for everyone to become day traders, constantly trying to time the market.
Okay, good, because that sounds exhausting.
He's actually a big believer in the long game,
The long game meaning.
focusing on the fundamentals, finding strong companies with solid track records of profitability.
So not just chasing the latest fads.
Exactly.
Yeah.
And to illustrate this point, he tells this great story about meeting with Charlie Munger,
No way, Warren Buffett's right-hand man.
the one and only.
Okay, what'd Munger have to say?
Munger basically emphasized the importance of patience, discipline, common sense when it comes to investing.
Sounds almost boring in today's world.
Right. But it's about cutting through all the noise and focusing on what really matters.
Which is?
Understanding the businesses you're investing in. Looking for genuine value, not getting swept up in hype.
Yeah.
And McDonald believes this approach.
Yeah.
It's more important than ever in today's crazy market.
Because it's easy to get caught up in the frenzy.
So easy. But Munger's approach, it's all about tuning out the noise and focusing on the long game.
Slow and steady wins the race.
Exactly. But the question is, how do you actually apply that to a world that feels anything but slow and steady?
Right. Everything's moving at warp speed these days.
Well, McDonald offers some practical guidance in the form of 6 key investing signs to watch.
6 signs. Where did those come from?
They're outlined by Adrian Day, another really sharp investor McDonald interviewed for the book.
Okay, so what are these signs?
Well, one that really stood out to me, given our conversation about potential bubbles, is this idea of underinvestment bias.
Underinvestment bias. Okay, I've never heard of that one before.
It's a little bit counterintuitive. But basically, it's this idea that after a long period of low prices or, maybe some disappointing returns in a particular sector,
Yeah.
companies get a little gun-shy.
Gun-shy.
They hesitate to invest in new projects even when demand starts to pick up.
So instead of too much money chasing too few assets, you get the opposite. Not enough investment to meet demand.
Exactly. And McDonald argues that we're seeing this underinvestment bias play out in a few key areas right now,
Mm.
like energy, for example.
Right, which makes sense given all the talk about an energy crunch.
Exactly. And it's not just energy. We're seeing it in certain commodities, too. The raw materials that go into everything we use.
So this underinvestment bias, it's like a silent threat, something that doesn't get as much attention as maybe it should.
It's a really important concept. And it ties into another big theme in the book. McDonald's really concerned about the future of the U.S. dollar.
The US dollar, everyone always says it's the world's reserve currency. What's he worried about?
Well, for starters, he's worried about what he calls the weaponization of the dollar.
Weaponization. Okay, now that sounds serious.
It is. He's basically talking about how the U.S. uses economic sanctions as a tool to achieve its foreign policy goals.
Right, sanctions have been in the news a lot lately.
For good reason.
Mhm.
They can be really powerful tools. But McDonald argues that using the dollar as a weapon could backfire in the long run.
Backfire, how so?
Think about it. If you're another country and you're constantly worried about being hit with sanctions,
Yeah,
you're going to start looking for ways to reduce your dependence on the dollar, right?
it makes sense.
You don't want to put all your eggs in one basket.
Exactly. And McDonald points out that countries like China and Russia,
Right.
they're already actively seeking alternatives to the dollar for international trade.
So it's like a slow motion shift away from the dollar as the world's dominant currency.
It's definitely something to watch.
Yeah.
And it ties into this bigger theme of a multipolar world.
Multipolar meaning what exactly? More than one superpower. Exactly. The U.S. is still a major player, of course, but its influence is waning. And that creates both challenges and opportunities for investors.
Okay, so how do we navigate this new landscape? If the old rules no longer apply, what's the new playbook?
Well, McDonald emphasizes the importance of understanding global macro trends,
Macro trends meaning?
the big picture stuff,
Mm.
geopolitics, demographics, technological innovation. These are the forces that are shaping the future, and you need to be aware of them if you want to make smart investment decisions.
So it's not enough to just look at PE ratios and balance sheets anymore.
It's about connecting the dots, seeing how all these different pieces fit together.
It sounds like McDonald's advocating for a more holistic approach to investing.
Exactly. He also stresses the importance of being adaptable.
Adaptable how?
The world is changing faster than ever before, so you need to be able to adjust your strategies as new information emerges.
So it's not about finding one magic formula and sticking with it forever?
No way. It's about staying informed, being nimble, and being willing to change course when necessary.
Sounds like McDonald wants investors to up their game.
He does. But he also believes that this new landscape, while challenging, is full of opportunity.
Opportunity for those who are willing to do the homework.
Exactly. The key is to be prepared to think differently and to embrace a more strategic approach to investing.
Well, there you have it, folks. A crash course in McDonaldomics. We've covered a lot of ground today.
We really have. From the end of the post-Cold War boom to the rise of China, the energy crisis, the crypto craze.
I even got some wisdom from investing legends like Charlie Munger and David Tepper.
It's been quite a journey.
It has. But if there's one big takeaway from all of this,
Yeah.
it's that the world is changing and investors need to change with it.
Couldn't have said it better myself.
Thanks for joining us on this deep dive into the world of finance and geopolitics. We'll see you next time for another fascinating conversation. Until then, keep those brains buzzing and those portfolios diversified.
It's your